thanks everyone. I think everyone has the agenda, what we're talking about today. These three gentlemen in the industry don't need any introduction, and I'm going to have them talk a little bit about their companies first before we get into the thesis of exploration. We have Sean Boyd from Agnico. We have Sean Roosen from Osisko Gold Royalties, and we have Graham Shuttleworth, the CFO of Randgold. And as I say, for this group, the individual companies will not need any introduction. They each have a slight tweak on exploration from my understanding, but I will be interested to hear from all three of them today about how their approach might be slightly different to exploration. So, Sean Boyd, maybe perhaps I could start with you. Could you just give a little bit of an overview of your business? I think 95% of the room will know your business, but a bit of an overview of your business, and then talk a little bit about your company's approach to exploration.
Sure. Good morning, everyone. Agnico is celebrating its 60th year in business this year. Started producing silver north of Toronto in 1957. We produce about 1.7 million ounces of gold, in a bit of a growth phase right now, growing that output to over 2 million ounces as we go beyond 2020. We wouldn't be here today in the strongest position in our 60-year history without our exploration team and exploration success. It's not just about budgets and how many drills you have. It's the fact that exploration is a core part of our strategy, particularly in identifying early stage opportunities that we've been able to see through the risks that are inherent in the mining business and not let that view of risk cloud our view of geological potential. And it's that team that's been in place for well over 20 years that's been very successful in allowing us to see that opportunity and then putting programs in place to realize that value for our shareholders.
And Sean, just staying on your company for a minute, what kind of budget, I don't know what you've disclosed to the public, but generally give us a flavor about the size of capital that you would spend a year on exploration.
125 million this year, probably going up to about 135 million next year. We have about 900 employees in our exploration group on a base of about 9,600 employees. So it's critical to how we've built shareholder value and per share value over our 60-year history.
Very, very helpful. Okay, I'm going to move, Graham, I'm going to move to you next, if that's all right with you. Randgold, and you and your CEO are very vocal about the importance of exploration in the industry, but if you could talk, again, I don't think Randgold needs an introduction, but a bit about your business and then your and Mark's approach to exploration.
Sure. So, we haven't been around 60 years, but we've been around just over 20 years. And, unlike many companies, we grew from being an exploration company. That's how we started our business. And exploration is what we call the heart of our business. It's very much, in our DNA. I always say anecdotally, we have an executive committee meeting every week, and we start our meetings with exploration, and then we move on to production. So, that gives you some idea of what it means to us. And certainly, we started off with no production in 1997. Since then we've discovered 33 million ounces of reserves at a cost of $20 an ounce. So you can see the kind of value creation that's provided our shareholders. And it's very much at the heart of what we do. This year we will produce around 1.3 million ounces of production. And other than one M&A transaction, all of that will have been delivered through exploration success. And even the M&A transaction that we did in 2009, the acquisition of Moto, we could do that acquisition because of our exploration skills. So we could look at that acquisition. They had 5 million ounces in reserves. We could look at the geology, and our guys knew that there was a lot more. And within 6 months of having done that transaction, we had 10 million ounces in reserves. So that's that is the heart of what creates value for shareholders and what's allowed us to succeed over the last 20 plus years.
Can you give us a little bit of a flavor as to quantum? I don't know whether you release a figure publicly, but give us a flavor about your commitment to exploration.
So we're spending around $50 to $60 million every year on exploration. And importantly, it's been consistent at that level for the past decade. So as the cycles have gone up and down and people's appetite for exploration has sort of waxed and waned with the vagaries of the commodity price cycle, we've been very consistent throughout that period, spending that 50 to 60 million in a not dissimilar way to what Sean is saying, in a disciplined, steady approach, which ultimately is, we believe, gives us a lot more return on that exploration.
Okay, very helpful. Sean Roosen, maybe we could turn to you, and your business is a fascinating process of incubating new businesses. If you could talk a little bit about the accelerator model and talk a bit about your business model and exploration.
Sure. Well, I'm obviously the new kid on the block here, having Osisko's only been around for 15 years, in various formats. So our current form is that we're a royalty and streaming company with a very heavy exposure to exploration development through what we call our accelerator companies, such as Osisko Mining, Osisko Metals, Strongbow, Falco, and Barkerville Gold, which are sort of our tier one accelerator companies where we've tried to put money, management teams, and good projects together in a single asset company. And then to be a stimulant to see that work go on. Across the platform, we currently employ about 130 geologists. Considering there was only 5 of us in the office in June 2014 when we started the company, we're quite happy with the progress that's been made, and especially in the accelerator companies. And right now we have 41 rigs turning in those companies, and we have an exploration budget across the platform of about $180 million for 2018. And we've been producing quite a few exploration results, both at Windfall Lake, at Falco Resources, which recently published a feasibility study, and more recently Barkerville as a brownfield camp. So our basic strategy is that all wealth is created at the drill bit. Everything else is really a de-risking operation. So we stick pretty much to that primary philosophy. We were fortunate enough to find Canadian Malartic, which ended up spawning the beginning of Osisko Gold Royalties one morning in Sean's office about 3.5 years ago. We were having coffee on a Saturday morning, and we ended up with Osisko Gold Royalties. So that was a good moment in sports history, and we just continued to stick with the plan of being good sponsors of good exploration teams and good projects. So it's a pretty primary business plan that we work out.
When I looked down the list, you're incubating a number of companies with significant stakes in smaller cap stories that have significant exploration programs. How do you manage that? How does the top co manage the exploration programs or encourage the exploration to continue at all of your companies?
It's been driven by success. We put money behind the teams that are having the most success. We had a pretty strong viewpoint as a culture of exploration developers. We inherited a lot from Cambior, who was a group that of engineers and mine builders that came to join us in Osisko One. We had a group led by Chris Loader that came in from Anglo Gold that had quite a bit of success, and collectively the group has about 80 million ounces of greenfield discoveries and brownfield discoveries amongst the entire team. So we've tried to leverage that. So it is a little bit like playing hockey with 7 pucks on the ice. But it's what we've always done, and it's just it's a different form now in that we're an exploration and streaming company, with an access to capital cost that's a little different than we would have been in the single asset exploration company.
Okay, very helpful. I'm going to move the conversation still on exploration, but Graham, I'm going to ask you a question, and Sean, Boyd, I'm going to ask you the same question. What, other than just purely tax, what other things can governments or jurisdictions or territories or provinces do to help you fund exploration?
Well, I think for us, it starts with access to ground.
Yep.
And in a lot of the countries where we operate, that can sometimes be problematic in that there isn't good control over that, and there aren't good systems in place. And to the extent that there are systems, a lot of the ground is unavailable, or it's very patchy, and so it's very hard to get a significantly large enough piece of ground to make it worth our while to do an exploration program on it. So that would probably be the starting point. Without access to the right ground in the right place, nothing else really matters. Having said that, obviously tax incentives are one thing, but probably the most important thing is actually stability. It's understanding the rules of the game before you get in there and having the confidence to know that those rules will remain the rules even when you've made a discovery and you're moving into production and you're going to make those very large investments up front that you need to do in mining. You need to have the confidence that that the rules of the game will remain the same and that it'll be a level playing field. So those are the two things I would point at.
Okay. Sean, could I ask you the same question? Maybe, I don't know if there's a difference between provinces, or in some jurisdictions it's better for exploration than others.
Yeah, I would say for us, a big part of our budget is focused in the regions we currently operate in. So we've got 4 main regions. And I would say that the area that's shown the biggest potential is Nunavut. So in Nunavut, it's not really about tax treatment. It's really about infrastructure and access to ground. And fortunately, Nunavut's a place where the local population wants mining. It's pro-mining. Very few people understand that when Nunavut was formed in the late 1990s, the Inuit took back 18% direct ownership in Nunavut. So the Inuit are the largest landowners in the world, and they selected that land based on geological potential. They hired geologists. And so they're open for business. So from a government perspective, what we'd like to see is investments in infrastructure in an area that we think from an exploration and mine building perspective, it's just getting started. We're just scratching the surface there. So we see a lot of potential there. So we'd love to have the federal government investing with us, opening up that region.
And how, for you that now you're north of a $10 billion market cap business, you're a significant business, how much of that is proactive? How much of that is you saying, look, this is an area we want to focus on in Quebec, or this is an area that we want to focus on in the territories? Now we need to bring the state or government along in terms of infrastructure, or is it the government has committed to infrastructure and you follow? Or maybe give the group...
No, the government's following.
Yeah.
In Nunavut, in the case of Nunavut. And the federal government of Canada still has a big say in what goes on in Nunavut. And the current government campaigned on a platform of investment in infrastructure, investment in the north, and reestablishing relationships with the Indigenous people in Canada. And I'd have to say we're still waiting to see that. And so what we're saying is when we go to Ottawa and talk about exploration and upside, we're not going and asking for money for our specific projects. We're just asking for investment in a part of Canada which is going to be increasingly important as we move forward, given the resource wealth that's there. And so we find that we can get a really high rate of return on our own. It would make our life a bit easier if the government was investing alongside us.
Yep. I'm going to change the question slightly for you, Sean. You're a seasoned hand with the capital markets and have raised a significant amount of capital for various companies that you've incubated or your accelerator model companies or companies you've been involved in. Do you think the current capital markets are paying the right number for exploration? And maybe talk a little bit about how you work with the capital markets so that people better understand the exploration profile.
Yeah, I think Osisko as a group, we've had pretty good access to capital over the last 3 years. Not the same can be said for every exploration company. So there is a bit of selectiveness in terms of where shareholders are willing to invest in exploration. And exploration, I describe it as like yacht sales. Geologists are the last ones hired and the first ones fired in every cycle. So the continuity of knowledge base in the exploration is a challenge, I think, in terms of stop and start too many times, too many projects get, one group's on it and then it gets sold to somebody else and they start from scratch. So we end up with a lot of duplicity in terms of repeating exploration, which is not efficient for shareholders. So we're trying to be a conduit for a more steady hand in exploration, to have more continuity, you know, as both the Randgold and Agnico have proven. It's a long-term business, and it's a people business, and you have to have your people with you all the way through. So we focus a lot on trying to get the right groups together and trying to maintain that technical excellence. But you know, getting young people into the industry and training them to do what has to be done and giving them the opportunity to hone their skills through more than one cycle has been a challenge. And if we look at the average age of who's in the field doing exploration right now, it's probably everybody's in their 50s, if not older. So that's one of our challenges, I think. And then I think for shareholders that have bet with us, one of the things that we try to bring to the table is a well-rounded human resource approach to how we're actually going to execute this, what success looks like, and how do we get you paid. So that's the challenge.
We've had the two panels before us, had Evie and George were on, but there's been some very heavy-hitting buy-side panels before this panel. Do you think that?
You know, I prefer to think of it as R&D.
Yeah.
I don't really know that we should be calling it exploration anymore, because we compete against tech markets and high-tech markets where people seem to be more comfortable with R&D. And I think that, you know, a certain amount of every business is in R&D, and we need to do a better job of getting returns on that R&D for the shareholder base. And right now we're in a bit of a tied-out capital market for resource sector, where we're seeing a lot of competition, you know, from anything from blockchain currencies to Amazon, to all these sort of technology-based companies that are out of the tangibles. So I think where I see it right now is that the generalists are not really participant at this point in time. If they are, they're coming through companies like Agnico or ourselves or Randgold, but they're not going down to the next level in any large amount of capital right now. We saw a bit of a market in 16, but I think right now it's a bit of a tied-out market for exploration.
Okay. Maybe, Sean Boyd, maybe ask you on that point. Have you found, because it's an interesting topic, and I know I had this conversation with Lucas Lundin last year, have you found that technology has improved the efficiency dollar on exploration?
Not dramatically.
Not dramatically, yeah.
And I think it's, the success rate, I think, is driven by consistency of spend.
Yeah.
And consistency of spend, what that gets you is the best people. Because a lot of people don't want to work for companies that practice this boom and bust mindset of investment, because it creates way too much uncertainty. And we've been fortunate because of being able to think long term, and we don't want to be everywhere in the world. And where we choose to be, we need to be able to see a multi-decade business. And to have a multi-decade business, you need the best people, and you need to think about creating value over time. And if you have a consistent budget, very good people stay. And I think that's the competitive advantage, and that is much more important than technology improvements, because they're generally at the margin. There's no sort of big breakthrough that is going to make it that much easier to find gold, because gold is microscopic in minute particles. It's a tough game, and people make the difference.
Graham, on the people point, staying with exploration, can you talk a little bit about what Randgold specifically and the thesis around Randgold, because I've heard Mark talk about it many times, how you work with universities, or how you help, you're recruiting for talent, which is linked to your exploration program, some of the things that you are doing tangibly?
Sure. So we have in the field around 90 geologists at the moment in the exploration team. And I would say 80+% of those will be nationals. If you look at the programs that we've been running, it starts with literally taking the best talent from students that are finishing high school in the countries where we're operating, and sponsoring them to go to universities, whether that's geology or mining engineering or environmental, whatever the choice that they may have. But obviously a lot of those are geologists. Sponsoring them into university,